In this problem, we will tackle problem P3 on page 35 of the Excel Applications book. To begin this problem, have the file called P2Work open in your Excel program. Again, remember the file name is always shown in parentheses at the top of the page. In this problem, we will learn to prepare a worksheet for a sole proprietor merchandising firm. In addition, we will also prepare financial statements, answer some what-if scenarios, and create a chart. In this Excel spreadsheet, you are given a trial balance for a company called Sports Connection. By the nature of the accounts given in the trial balance, we can determine that this company uses the periodic inventory method. That means that all purchases of merchandise have been recorded in the purchases account, and all sales of merchandise have been recorded in the sales account. The merchandise inventory account, located in the assets section, is not touched at all for a company that utilizes the periodic inventory method. Keep this in mind, as that information will come in handy later. The author gives us several adjustments that need to be made. Prior to making the adjustments, I would strongly encourage you to complete the formulas listed here on line 33. In each of these formulas, you will sum up the total from the top of the column to the bottom of the column. Stop this video and take care of that process now. By doing this, we will ensure the equality of the account columns as we continue through the adjustment process. I'll do Formula 1 for you. Equals sum from the top to the bottom. That's how you're going to complete the formulas. I'll do one more. Equals sum, open parentheses, from the top to the bottom. In fact, once you have that formula in, you can use the fill handle and drag it across. This will ensure at all times that when we make an adjustment, our adjustments are in balance. Let's get back to the adjustments. From Accounting 100, let's recall several important points related to the adjustments. First of all, adjustments and all adjusting journal entries are made at the end of a period to bring certain accounts up to date. A few more facts about adjustments. They typically do not involve cash. They always affect at least one income statement account and a balance sheet account. This means that if you mess one up, all three financial statements have errors. That's why the adjustment process is so important. To get started, let's look at a few of these adjustments together. On page 36 at the top of the page, the first adjustment, letter A, says supplies on hand as of June 30th was $450. Go take a look at your supplies account. You'll notice that right now there's $2,370 in the adjustment account. The book just told us that the balance should be $450. Many of you are going to put an adjustment amount of $450 in the cell, and you would be wrong. Why? Because the balance in the supplies account just keeps going up, 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 up. We need to make an adjustment for the amount used. So if we look at our trial balance and we see that there's an existing balance of $2,370 and the balance should be $450, we're going to subtract the two to come up with the adjustment. In this case, it would be $1,920, or the difference between the $2,370 that appears here and the $450 that the book gave you. So I'm going to come into column F, the real skinny column, put my adjustment A in there, and put the difference between the two amounts, or the amounts used up, as 1,920. Now my supplies went down. By the way, when you do that, you'll notice that the adjusted trial balance automatically recomputed to be the $450. That's because your author wrote formulas in the adjusted trial balance column. So as we enter these adjustments, the adjusted trial balance columns will automatically update. So if supplies went down, we need to find a debit amount, and anytime a cost is used up, it becomes an expense. So to complete adjustment A, I'll find the appropriate expense adjustment, which in this case is supply expense, and put the same amount in there. And as I do this, I'm always checking to make sure that my columns balance. Okay, take a moment and do the next few adjustments. I'm going to drop down to adjustment F because some people have trouble remembering how to do the inventory adjustment. This adjustment is unique in that in Accounting 100 you learned how to do this entry in 2 steps. So let's take a look at letter F now. Letter F says merchandise inventory at the end of the period on June 30th was $68,864. You want to focus on the merchandise inventory account, and we're going to do this in 2 steps. Take out the old, put in the new. Right now I have $47,964. I'm going to take it out by crediting it for that amount, $47,964, and I'm going to go put the debit into a temporary holding account called income summary. So again, we're doing this in 2 steps. We're taking out the old, which we've just done, and now we're going to put the new back in. Again, look at the inventory line. That brought our inventory down to 0. Now we're going to go put the new inventory back in, which the book says is $68,864. Oh, made a mistake. Let me go change that to letter F in the skinny column and put the adjustment amount where it goes, $68,864. Once again, I'm going to use income summary for the offset, $68,864. Okay, again, the process is to take out the old, put in the new. This income summary account is the only account that we do not net in the financial statements. In fact, that's an important concept. I'm even going to write a note to myself, and maybe even to you, do not net. Do not net. In fact, I would bring both of these items over to the income statement account because you'll need them when you calculate cost of goods sold later in requirement 5. Soon you're going to hear me talk about filling in these income statement and balance sheet columns. I should see no numbers entered anywhere in these 4 columns. It's all going to be cell references. So right now, so we don't forget about it, let's move both of those income summary accounts over. I'm going to be doing that by putting in a cell reference. So first, I'm going to bring my beginning inventory number over, equals, I'm going to go click on the cell where it's located, which is in E27, and press enter. And then I'll go bring my ending inventory over by clicking equals, and clicking on the cell location, which is G27, and pressing enter. Again, do not net the inventory adjustments. You'll need both of those numbers when you calculate cost of goods sold later. So where do you go from here? we did 2 adjustments together. You're going to complete the adjustments by dropping them in the appropriate categories. You may need to pull out an Accounting 100 book if you're a little rusty, but you will not be allowed to use a book on tests and midterms, so make sure you are familiar with the accounting. Our next job after you complete the adjustments is to drop in every number that shows up on the adjusted trial balance into either the income statement column or the balance sheet column. As you recall from Accounting 100, the only items that go in the income statement are revenues, expenses, and income summary. So to help you solve this problem, you may want to take a look at the accounts and even consider color coding your work. Okay, for example, if I'm looking at the income statement columns, the first revenue account that I see is sales. That means that all the items in all the different revenue accounts and expense accounts, including income summary, are going to be going in this section. Let me see if I can color code it for you here. Having a little bit of technical difficulties here. So you can do it with your computer. Color code these items. The rest of the items in the balance sheet will be shown down to the drawing. And again, you have a couple other balance sheet accounts down here. You might want to consider color coding them to help you. So as the final step of completing this worksheet, I'm going to start at the top. Cash goes on the balance sheet. Notice I'm going to be using all cell references. So in the cash column, I'm going to press equals, and I'm going to go grab my cash number and press enter. And accounts receivable belongs on the balance sheet. Equals, go grab my accounts receivable and press enter. Inventory equals, go grab my trial balance number and press enter. I'm going to do that all the way down. Note that when I look at the formulas in your template, I should see only cell references here. In other words, if I do a control tilde, which turns everything into formulas, one of the things I'm going to be looking for on your paper is that there's nothing but cell references over in the income statement and balance sheet columns. Control tilde again will toggle it back to the regular worksheet. So how will you know if you've completed the template properly? You will be given a check figure in your test. Also, the income statement and balance sheet columns will be balanced out by the exact same number on the opposite side. Right now, these two numbers are different because I haven't yet completed the problem, but when you complete it, these two numbers must match the textbook and they must match each other. Finally, just as on your previous problem, you were asked to create a set of financial statements. In this problem in requirement 5, you will also be asked to complete a set of financial statements. Since you are enrolled in an Excel class, I strongly encourage you to do the financial statements on an Excel spreadsheet instead of on a piece of paper. In fact, I would encourage you to open a new sheet like this by clicking the new sheet and consider creating the statements on Excel. So, for example, I will get you started by doing the income statement. So I'm going to start off with the 3-part heading, as all financial statements have, or the who, what, when. This is sports connection. Our first statement is going to be an income statement. And we can put the period ended. I believe this was for the year ended, looking at your book. For the year ended June 30th, 2013. And again, we'll worry about centering these things at the end. I'm just interested in making sure that you consider doing these in Excel as opposed to on a piece of paper. So looking at your accounts, our first section is going to be sales. Whoops, started it in the wrong spot. Let me get back over here. So we have sales. And then the next section, if it's been a while since you've had Accounting 100, you might have forgotten how to do the cost of goods sold. So I'll help you through that. Cost of goods sold. And remember that cost of goods sold is the beginning inventory plus the purchases. I don't think we had any contra purchases accounts. That'll give me my merchandise available for sale. And then we'll take out our ending inventory to finally give me my cost of goods sold. The idea of Excel is to have it automatically update when changes are made. That means in my income statement, I'm not going to use any numbers. Rather, I'm going to use cell references. So for the sales number, I'll press equals. I'll go grab my sales number in the adjusted trial balance or in the income statement. And in my case, here's my sales. I'll grab it from right here. If I had completed the template, my number would also be over here. So consider pulling it from either the adjusted trial balance or the income statement. I'll press enter and there's my number. Do the same thing with each of these cells. So beginning inventory equals, go to your worksheet. Here's my beginning inventory. That's why we wrote do not net, because you needed these numbers in cost of goods sold. So I'm going to press equals. Okay, I'm going to add my purchases. Once again, I'm going to go pull it from the worksheet. Equals. Go grab your purchases. Again, if I would have completed my worksheet, they'd be over here. But for right now, I'm going to grab it from there. Merchandise available for sale is a calculation. So I'm going to add up those two. Equals sum. And I'm going to go get my ending inventory, also from my worksheet, sitting over here in the credit column in income summary. And cost of goods sold can now be calculated by taking the merchandise available for sale here and subtracting out the ending inventory. Okay, in fact, I think I will move it over one so it stands out a little bit more. You have some cleanup work to do. You can go put your underlines where they go. There's lots of ways to do underlines. You learned about it in all of your lessons. So choose whatever you're most comfortable with and make your template look the best that it can look. Okay, I'm actually using a tablet to do this problem on. So having a little bit of difficulty finding the right items. And of course you have some cleanup work to do. In other words, this needs to be centered. You learned how to do all of the different centering in all of the lessons. There's many ways to do it. I don't like using merge and center, so I'm going to center it this way. Again, if you've forgotten how to do those things, go back to the lesson. And to wrap this up, sales less cost of goods sold would be gross profit. And again, you'll have to put some underlines in there to get it to look neat. And from here, you would list your operating expenses. And those would be all the other expenses in your trial balance that weren't used in the cost of goods sold. So, as always, I'm available here if you need any help. If there's anything you get stuck on, shoot me an email or consider coming to a lab or to my traditional class. And as always, I'll be happy to help you. I look forward to reading your updates by the end of the week.